moving on to the second panel discussion, can I welcome up onto the stage Billy Hynes, Mark Weil and Jeremy Watson to the stage. Now, Richenda Connell, founder of Acclimatise, has had to pull out and has sent her apologies. Let me tell you a bit about these three gentlemen. Our first speaker is going to be Dr. William, although he says, call me Billy Hynes, Director of Future Analytics Consulting. Billy's a chartered urban planner, a chartered surveyor. He's a lecturer at the University College Dublin and Dublin Institute of Technology, lecturing in the areas of land use and transportation. Mark Weil, CEO of Marsh UK and Ireland, Chief Executive of that risk advising company, management consultant before with Oliver Wyman. He's a Cambridge engineering graduate. And Professor Jeremy Watson, Managing Director of the Capital Science and Policy Practice at Willis. He's responsible for strategy and government engagement. So many thanks to the three of them. Just to let you know, this session is obviously about defining the risks that cities face and how developing a fuller, more rounded understanding of what we mean by urban resilience is starting to influence the way property and infrastructure investment decisions are made. Please welcome, first off though, Billy.
Thank you very much, Daisy, and thank you very much, ladies and gentlemen, for giving me this great honour. Thank you to Base London for inviting me here today, and for Lee Fisher kind of making it happen for us. Much of what I'm going to say today, I hope, will be thought-provoking and interesting, and will follow on from a number of the points that was made by our previous four speakers, which was again very thought-provoking. The overview of my presentation, I'm going to talk about issues of urbanization, and again we've had discussions about that this morning. What this means within the whole issue of security, and linking that then in with the challenges that faces London. Then moving towards this whole issue of urban resilience and the emerging resilience agenda, not only in terms of its infrastructure, but also in its governance, its economic, its social stance. And then talking about a project that we're involved in, an EU-funded project looking at Harmonise and the resilience of its infrastructure throughout Europe, and then some concluding points and a bit of a discussion about our fringe session at lunchtime. So the issue of urbanisation, and according to Professor Daniel Hornwig from the University of Ontario, this is one of the world's most important phenomena. Again, just very briefly looking at how urbanisation is changing from the last 100 years and where it's going to over the next 35 years. In 1913, throughout the world, 10% of our population lived in cities. Currently, 2013 figures show that we're up to 50%. And over the next 35 years, this is moving towards 75%. And even if you take the UK example, approximately 90% of the population is urbanised. So with that brings massive challenges. Challenges of well-being, and we've discussed it this morning. Challenges of the infrastructure impact, the critical infrastructure, the pressures that are being placed on that. The issues of doing more with less space, and how we're going to develop smarter cities, more improved cities, again, for the betterment of our citizens. So this is a citizen-centric issue that we have to face into, this urbanisation. And taking this, for example, within London, this whole issue of how London has changed over the last 100 years and where that's going to. Interestingly, the figures over that 100 years haven't increased that much. The figures of 1911 show that there was a huge level of urbanisation within London, but it was a different type of urbanisation. It wasn't the well-being situation that we have today. Today we have a very similar or almost slightly growing population within London, but we have this increase in well-being. We've had a huge commercialisation, and also we've had the issues of pressures being put on our critical infrastructure and how we're going to respond to this. This places this whole issue of cities working in a system of subsystems. The infrastructure related to each other, the interconnectedness of this infrastructure is absolutely of critical importance. Again, linking to this is the whole issue of what this urbanisation is doing for issues of security. And we're not talking about security of not only of the people themselves, but issues of food security, energy security, issues of climate change, public health and disease, economic development and trade. All of these issues have to be considered within this globalization, within the security, and how resilience and the resilience cycle can improve this to make it a better place to live and work. It is a complex environment. An urban environment is a very complex situation. Again, I refer to the concept of a system of subsystems. Cities and their supporting infrastructure are increasingly interconnected and interdependent. If you take a very simple analogy of our tube network and how that is very much interconnected. And there's a challenge there looking at urban resilience of how this resilience and the resilience of infrastructure can either safeguard its global stability or else be an exemplar or an amplifier of these cascading shocks. And the more cascading shocks that mount, the more disasters and threats that can result. So we have to focus on the stability as opposed to the cascading effects. We've discussed earlier about the increasing population of London. And a very interesting statistic that we've come across is this: by 2030, London's population will have grown will have increased from 33 to 38 boroughs in terms of population, but still having to be maintained within our 33 boroughs. So we've had this issue of increased capacity, increasing in brown infrastructure, increasing the provision of good, affordable, quality housing. Again, these are of critical importance when we look at the future options and the future challenges that is facing London. And with this is the whole issue of affordability. And again, we've had this discussion this morning, how the affordability crisis of housing in London is rapidly increasing. Again, 2013, house prices in London are 6 times increasing over 6 times faster increase than over income. And if you just take two very simple examples of earnings and house prices, comparing London with the national average, the London earnings is approximately 25% higher than the national average earnings. However, when you compare it with house prices, it's almost 300% higher. And that is a massive issue to be addressed in going forward, in not only in the increasing population, but also in the issues of retaining high-quality staff at an affordable level so they can actually live and work and purchase the required housing. With that is the whole issue of infrastructure demand and what is considered is our key infrastructure. Within the Irish context, we are currently devising a forum that is actually addressing the issues of what is our key infrastructure, our critical infrastructure, categorizing these and ranking these and placing an importance on them. And if you take, for example, the London Tube is a critical piece of London's infrastructure for the movement of people. For the demand on the Tube has grown by over 10% in the last 5 years, carrying, for example, in 2012, 36 million extra movements, which is absolutely phenomenal when you think of it. So that alone and this interconnectedness with the rest of our infrastructure is of key importance in terms of the resilience cycle. And I will come on to the resilience cycle briefly. Again, looking at investment, the work done by London First at a conference earlier this year in March, they expressed the concern and requirement for London to develop as an economic growth engine for the future as a global city. However, very startling statistics have come about of the actual investment in infrastructure in London. With approximately 7% of the taxation of London is retained for infrastructure. And if you compare that to New York, it's 7 times that. Almost 50% of New York's taxation is retained for investment in its infrastructure, which is a phenomenal statistic when you think about it in the London context. So again, that needs to be borne in mind about how we're going to provide for future infrastructure provision, again, to maximize the economic growth potential and its growing population. This brings us about to this whole definition of urban resilience, and actually what is urban resilience. And this definition has somewhat sprung from our understanding of sustainability, which came about in the late 1980s. And sustainability has kind of moved towards this definition of resilience. And kind of one of the most recognized definitions now within the urban context is the capacity of a city's economic, social, political and physical infrastructure systems to absorb shocks and stresses and to retain their basic function and structure. So it's not only its ability of the capacity of the system from its physical side, but also from the social, the political and the economic side. So again, it's a very integrated process, going back to the concept of a system of subsystems. And this has led on to other accepted definitions. It's the ability to prepare for and adapt to changing conditions and ability to recover and withstand, again, from shocks. But it's not only to recover, but it's to improve, to bounce forward, to learn from this resilience turn of where we're actually going to in the future and how we can improve on our situation through the greater knowledge, the understanding within this resilience cycle, within this resilience definitions. There is a well-known understanding that's been put forward of these urban resilience concepts. And it's interesting to look at these concepts individually, but I've attempted to group them here with the group over here on my far right, looking at the whole issue of thinking, the concept, the process and the approach. On this side here, on the left-hand side, looking at the principle, the quality of the system and the response, and bringing those two together to bring it into the bottom three there, looking at the practice, the policy, and how we can prepare a strategy for the whole resilience cycle within these perceptions. Again, and the grouping of these perceptions to give real reality, real definition to our cities going forward. The evolving scope and focus, and this brings me very nicely onto this whole resilience cycle. It's well recognized that we have 4 stages of a resilience cycle. We have the mitigation, the preparedness, the response, and the recovery. And I'm going to show you some examples of cities now that are in different stages of this cycle. But again, it's very important that this cycle is iterative. It learns from the previous stages, it moves on and readapts and reinvents and learns from itself. So looking at some examples of where we are in this cycle, Curitiba in Brazil can be considered within stage 1 and 2 of this cycle in the mitigation and preparedness. Copenhagen, again within the mitigation. Oslo, again from its effects of the bombings in the last decade, is in stage 4 in the actual recovery period. Again, Christchurch from the event of the earthquake is in stage 4. Rotterdam from the flooding, stage 3, and London itself is at an early stage of actually mitigating and preparing for itself, for this growth, for this population growth, its economic growth within the preparedness and mitigation stages. And in particular, looking at some of these cities in detail, again, looking at the measuring of success of urban security within Rotterdam, the sustainable innovation, urban planning within Curitiba, Copenhagen looking at towards a carbon neutral city. And very interestingly, San Francisco, earlier this year in April, was the first city in the world to appoint a chief resilience officer. And many, many cities are following this concept now of actually appointing this resilience officer. So this is really at the forefront of thinking this whole resilience concept. And it ties very neatly in with Sir David's point about the catapult and where that's moving to within this resilience cycle. So this ongoing debate of matching security and efficiency to be more resilient. And I put up an example here of Beijing's airport, an airport-style security at its subway stations in May 2014. And even some of you can reflect on your travels maybe here this morning using the underground and how we're looking at this issue of increased security but at the effect of efficiency. Quite an interesting concept and how we're moving towards this, but yet we need to be people-centric in all of this, in all of these issues. And then looking at the whole issue of risk and how we as a city, as city planners, city architects, city economists, how we look at this type of risk and how do we mitigate against this, how we plan, how our urban form changes towards this. And again, looking at the example of Oslo and how they had a very integrated, say, governance system of building structure. And the bombings in Oslo affected very severely that whole infrastructure and many institutes of that governance, of that system. Where now, should we be thinking about a more dispersed governance within cities? But with that comes the issue of critical mass, economies of scale. Do we disperse or do we remain in a very confined space? So again, we need to think about these concepts as we are changing, as the cities are going through this dynamic change. And there's a need for harmonisation within London, this whole issue of harmonisation moving forward. Again, looking at work being done by the United Nations Office of Disaster Risk Reduction. And they're talking about issues of risk reduction, climate change, adaptation. They're inextricably linked. And London needs to think of these in a harmonious way to increase collaboration, integrate strategies, looking at stronger and better governance and innovation. And we discussed all these again today. So it's reaffirming what is going on at a global level. And finally, I'd just like to bring on to the work that we're doing. It fits very neatly in this whole resilience cycle, in this whole increased security cycle and what it means for global cities. So we're putting forward this issue of looking at the capacity of large-scale infrastructure to withstand, resist and reduce impacts of sudden extreme events in terms of magnitude, duration and external effects. And actually London and the whole London Bridge and Shard area is one of our case studies within this. And what we're doing here is we're actually introducing and integrating the resilience cycle, our 4-stage cycle, with what is considered the planning, the design and operation of a city and the cycles that goes through, and integrating those two systems together. Finally, I'd like to thank you for listening to me this morning. I think it's a great opportunity for us. Thank you very much for your time.
I'm Mark Weil. I'm CEO of Marsh Limited, the world's part of Marsh McLennan, the world's leading insurance broker. I've just flown in from 3 days in New York, which I'll just reference to start with, because we spent, as a firm, 3 days talking about just one thing, which was our purpose as a corporation, as a group of people, 55,000 people that came together in various bodies. And it was a surprisingly moving 3 days, because I hadn't realized, but the history of my firm is that it was born out of crisis. It was born out of disaster in Chicago, which led to a realization that there was a lack of coverage for insurance. It's a firm that lived through 9/11. We lost a lot of good colleagues in that event. And there were some incredibly moving stories about people who had, during Sandy, Katrina, their own homes underwater without power, driven hundreds of miles to man centers to help other colleagues and clients through those sorts of events. So there's incredible willingness in our firm to act and to be helpful in the face of catastrophe, but including and particularly natural catastrophes. And Fukushima was again a big event where we were deeply involved. And on a much smaller scale, in my 18 months in the industry and with the firm, one of the things that I was proudest of was a very small scale in the scale of the things I've just described, but during the recent flooding in Britain, we had a team that came to me looking for support to go to Dawlish in Cornwall, to be there for the flooding, to help again with clients and other businesses affected by it, to give them support on getting their money, getting paid, and working through it. So it's something we feel strongly. We want to be helpful, but we also need to be realistic. And I'm going to talk, I'll be brief, treat time as one of those natural resources we need to be sparing with. But I'm going to talk about a few angles to it that have come my way as I've looked at this. I'm not a climate change expert by any means. What I feel I know a little bit about is the problems of risk and risk financing. So that's the angle I'm going to just address briefly. And I'm just going to talk about the four agents, if you like, that are party to this. I'll start with the climate itself. We've we've done a survey with BASE of people's attitudes to this, and the general acceptance and indeed a major concern coming out of this and our work for the World Economic Forum that climate is a big issue. So in general, yeah, we'll get it. It's going to be a major source of disruption and danger and cost for enterprises. And if I broadly defined it, natural catastrophe adding up to all the other risks, some of them fashionable like cyber, some of them old-fashioned but still of great concern to property and people that are out there. So the climate speaks, and it adds to the general sense that volatility, if you like, risk after the golden pre-crisis period is very much back on the agenda. There's then, I'll call it the risk industry. That's broadly defined. It's banks, insurers, risk advisors like ourselves. Where do we stand on this? And my sense is, in general, we've got the message, and both from a commercial and a wanting to do the right thing from a sense of purpose point of view, are investing a lot. So in my own firm, we've just taken on as a non-executive John Hurst, who's the CEO of the Met Office, to give us some extra capability, both in general and specifically with respect to climate. We've invested a lot in the debate around resilient repair and government policy more generally around things like flood re and pooling of risk. And there's a but at the end of that sentence, which just let's be realistic about some of the aspects. So the first point I want to make is that going green, if you like, the avoidance agenda, regrettably in some ways, is only tangentially related to risk. So I would love to have a way of giving economic incentives to people for doing the right thing with respect to things like non-renewable consumption. There are things like resilient repair which do impinge on your future costs, but in the main, it's outside of our economic scope. So while we participate in things like ClimateWise and we're enthusiastic advocates ourselves in the Carbon Trust, it is hard to come up with meaningful solutions from a sort of purely business point of view in that regard. The second point, which is just worth noting, is that the very act of insurance, of course, obviates the need to be concerned. If we had perfect cover for these things, it would have removed the incentive to avoid in the first place. So I just note that fact, and that doesn't make the avoidance, the cover wrong, but nor does it deal with the root cause. So let's just have that in the back of our minds. And then a final point is that we're all beneficiaries and some victims of perfect data. Data does some strange things, which I'll come on to in a second, which is it makes certain risks uninsurable. If from your DNA or from your postcode I can tell certain things that are going to happen to you, then it becomes rather illegitimate to pool you with people who don't share those risks. Let me talk then about the government. The government clearly has a big role to play in the German floods, for example. I think there was an €8 billion bill in the last years. That starts to become a societal, a government problem that goes beyond the means of the individual insurance. But governments have some problems. There's obviously a temptation to defer investment, given the time horizon of the UK parliamentary system, or indeed to privatise the problem and try and make it somebody else's as best they can. And then there are some poor policy decisions, I'll come on to one or two of those in a moment, that have in other countries, like Florida and the US house insurance, that make things worse. They encourage people to do the wrong things, sort of a moral hazard problem, and that leads to problems. And then finally, businesses themselves. Well, you get it, again, in our survey, dominant response around the worry about climate change exposed directly. This is, of course, an event about London, but London is a hub with roots that spread out around the world in various ways. And those supply chains, infrastructure, data, other connections that business here relies on, indeed the population relies on, give you an exposure that is global, not just to the immediate environment. And I will make a broad statement that my exposure so far to our clients is that while there are lots of contingency plans around particular events, we're next to the Thames at Tower Place, we have an extremely detailed operational plan for what we would do to evacuate, disaster recovery centres, etc. But not many firms have then linked that to some of the financial impacts. So these things go wrong, particularly in the modern world of social media, they tend to go wrong very quickly. There's a doom loop you can get into, and you don't have long to act. So you need to think hard about financial as well as operational considerations. So rattling through that, when I talked about the problems of data, well, you could crudely say there are two types of natural catastrophe, and I divide those into the unpredictable, storm, hurricane-type issues, for example, and the predictable. And the predictable tends to be things like flooding, which has been more directly relevant in the UK so far as an issue. And that's caused by data. We're now pretty well able to map flood risk. We have a proprietary tool ourselves, but there are a number of others out there to do that. And the problem becomes, if it's unpredictable, then actually insurance applies very neatly. There have been a lot of investment in capital market solutions, catastrophe bonds. In the predictable, the problem is, what do you do when we know that certain postcodes are essentially going to carry a cost attached to flooding, and how do you handle that without causing moral hazard? If you insulate the people there from the problem, you obviously need to make sure you don't encourage more building in the same place. This just references what we're doing. So I mentioned resilient repair, our investments in this regard. So we have a lot of commitment to natural catastrophe as a whole. And this is really a mixture of advisory activity to try and help people think about business interruption, supply chain risk, and then insurance cover. And there's a lot of activity in this space, and a lot of clients, we hope, getting useful advice and cover, and potentially quite large cover. The cat bond market's been rapidly growing. We've invested in things like parametric cover triggered to particular types of weather or climate event that allow you to then trigger. Tends to be much more certain of speed and payment, which gives clients obviously a great degree of comfort. If I talk about the government, I'm going to talk about, I can't resist talking a little bit about Flood Re. I note, of course, it excludes businesses, which I'll come on to in a second. But we're involved in the debate around Flood Re, though not the final design. I mean, my sense on flooding is an example where you do need some form of pooling. It's a shared problem where, subject to a degree of randomness, you need to make sure that those most exposed can get cover. The problem we have is predictability, which means that insurers inherently will be reluctant to insure certain postcodes. That leaves something like 200,000 households without cover. That's not acceptable to a society, so we have to find some way to force that cover to happen, so enter the government. My problems with the scheme, I'll just note, are that what it essentially does, I mean, it passes the costs, it privatizes the problem, if you like, passes the cost of the insurance industry. I don't have a problem with the insurance industry paying, particularly for immediate flood costs. I worry, though, about the fact that if the government doesn't have direct skin in the game, will any given parliament be willing to live up to its commitments to do its bit, because prevention has a sort of 7-to-1 financial gain over cure with respect to flooding. I worry, of course, about any precedent. I'm sort of vaguely libertarian economist. I don't particularly like unnecessary windfall taxes and imposition of levies. So it does that, which is a slightly regrettable precedent that the insurance industry, by the way, it doesn't affect us, we're a broker, but that insurers might regret having that cast upon them. Probably the bigger issue for me is that it creates an unnecessary complication. It's a new vehicle. That vehicle requires reinsurance. That carries a cost we estimate at 150 million a year. That will be borne ultimately by policyholders, and in particular policyholders who are outside of the flood zones. And then the biggest problem I have singly with it, and indeed one or two other government schemes, including by the one they're about to introduce into the school system, is it doesn't charge for risk. It's a flat charge. And if you had to say what's the one golden rule of finance we should have learnt from the crisis, is charge people for risk. If it's a property risk and a mortgage, if it's to do with lending, or indeed to do with insurance. And a flat charge leaves an inherent moral hazard of people, builders, developers, local government, looking at floodplains thinking, why not? And then the arbitrary exclusions slightly worry me. So, Band H, well, they're rich, they can afford it. It's not normally the job of the insurance industry to make value judgments on wealth. And more importantly, from my point of view, businesses, so small businesses who are often locationally most trapped, pubs, leisure, those sorts of things are excluded. Look, commercially, it means that people like us will try and fill that gap, but it strikes me as a questionable decision. And then finally, I look at the I take that package and I just think it's ripe for unintended consequences to happen. I'll give you a simple example. There's no mechanism for making resilient repair. Actually, it gives, if I were living in a floodplain and I were that way inclined, I might think for a couple of £100 a year I can have my carpets and furniture replaced at the government's expense. Indeed, there'll be the rest of society's expense. So they're going to have to introduce rules that say things like, if you don't do this, you're out of the scheme. So in other words, the government gets to tell you what kind of carpeting you should have and where your plugs should be based, etc. It feels a little bit like an unappetizing consequence to have thought through. So if you're setting up schemes, be it for flooding, for health, for schools, think through the consequences is my advice on that. And then just to make this real, I'll skip over the detail of this, but the poor design, this is the cost of crises to the US taxpayer, and you see them rising rapidly over the decades and getting very lumpy. That is in part, in large part, because of not charging people the cost of risk, which means that you get that sea view, and if the worst comes to the worst and there is storm damage, it gets repaired. So it encourages building in the wrong places, which is something we strangely like to avoid. Let me then move on just to finally talk about firms. This is about businesses and your own resilience. And I've got a couple of observations here. So the graphics are going to be a little bit complex. It's data from our own firm and client base. The first point I want to make is that the riskiness inherent to firms is very different. So we see when we look at the claims count across clients over many years, this is based over several years of data, it just gives you the distribution of clients according to the claims they see, the losses they're incurring. You get a factor of like 10 between the best and worst. So in other words, there's a lot you can do to make yourself safe through decisions you make, your risk management procedures, and clearly a lot of clients are not, and they're relying on insurance for the gap. And that's fine insofar as it goes, but my suspicion, and I have some evidence to back this up, is that if you're suffering that greater degree of risk exposure, you're also running risks with the health of the firm as a whole and losses that might go beyond the ability to insurance to capture it. So there's a lot you can do to look at your individual exposure. And then secondly, you need to think about this in a much more dynamic way. Insurance has historically been a very static decision, that we have a certain exposure, we have a certain cover, we're fine. I don't think that's true anymore. I think you look at the cycle of impacts like the online retailer ASOS recently that happened to BP during their crisis. When things go wrong, they go wrong very quickly. This shows you some cash flow impacts. And in this particular case, we reckon this firm, with a couple of climate events coming their way, had something like 2 weeks of cash to survive. And they need solutions that work that quickly to maintain the confidence of investors and customers. Because if you don't have that, you get into a vicious cycle of decline. So from a firm point of view, do things to make yourself resilient, but also make sure that you're able to withstand a rapid series of shocks if something does go wrong for your business or indeed for your supply chain. So with that, just to summarize, yes, climate change is real and present danger. It will indeed conspire with other risks, potentially to lead to sort of crisis scenarios, crisis situations that you need to be thinking about. So as a business, my general take is we find a lot of people have not yet got all of the things they need in place to be sufficiently prepared to survive the impact and potentially the cash flow squeeze that comes with it. So you need that. You need a recovery plan that is not just operational. It includes reputational and financial considerations within it. With respect to the government is clearly critical in all aspects of this debate, but there, in my view, have been some poor choices around design made in pool schemes that they need to think through, and if they don't get that right, it can have some unfortunate consequences. And anyway, with respect to flooding in particular, you've been left to our own devices, which is, in general, something I welcome with respect to governments, but that means we do need to act. And then from a risk industry point of view, a lot being done. We care. We're trying to make the right choices and investments. I know at Marsh we've made big strides in our people and some of the capabilities that we've added. we've also tried to be influential on things like the government debate and policy choices with it. I will say, like many other areas like cyber, I'm old enough to remember Y2K, there's an awful lot of hype to scrape through. And I think it's important the industry gets beyond that and gets down to some nuts and bolts of things we can actually do to make a difference and help you and your firms survive and thrive in a more volatile world. Thank you.
Good morning, ladies and gentlemen. I guess I'm between you and coffee, so I better make sure I keep to time. I'm an engineer who's come late in my career, I guess, to the insurance industry. I'd make a note I work for Willis as Managing Director of a new practice dealing with capital science and policy. And I guess to some extent reflects the fact that in one of my previous roles I was a Chief Scientific Advisor to communities and local government and sort of dealt with some aspects of government science and communities. So what I want to give you is a bit more of an engineer's view, I suppose, of what I consider to be the issues around resilience and interdependence. I would reflect, though, that Willis, for whom I work, has got a very notable research network of around about 50 academics in universities around the world, and we are very keen to build evidence and strong grounds for supporting the work we do with clients to give them the best sort of cover. And I know we feel that there should be strong incentives for our clients to consider resilience, to design for resilience, and maybe government needs to require companies, for example, to have a resilience statement in their balance sheets. So I'm going to talk, as I say, from a relatively engineering point of view. London is a city of systems. You can see that from this satellite image. You can see the M25 there very clearly. The complexity is hidden by the scale, enormous amount going on. But diagrammatically, and I won't spend a lot of time on this, clearly there are many interdependent systems, the community, energy, logistics, mobility, food, etc. All of those critical and interdependent. In work I did with Treasury quite recently on engineering interdependencies, there are both advantages, if you like, synergies of some of those systems and also antagonisms in the sense that you can get cascade failures. If part of those go down, then there can be other issues which you need to deal with. There are many contexts. There's a city scale, so all the way through from the products that people use right the way through to entire cities and districts. And each of those have different interdependencies both across the scale and across the systems. So the key themes that I tend to think about, but I won't have time to cover in this presentation, are challenges associated with sustainability, resource use, social future-proofing, climate change, resilience to natural and man-made events. Issues like, for example, food availability in cities, very critical. If people don't have food in shops, it is said for 3 days they go feral. Opportunities like value aggregation through businesses working together, innovation, economic opportunity, transparency, safety, and so on. There are also enablers and threats. So the enablers, I will touch upon the first one. Obviously, Sir David, very critically interested in this digitally enabled integration through the big data story, the Open Data Institute, and so on. The threats really, again, are typified by the top one, which is a lack of holistic thinking across sectors. So we really do need to think of the city as a system and a system of systems, echoing the first speaker. The first point I wanted to make was about climate change, which is all very familiar now, but the actual impact on society is immediate, and it's not just about mitigation, it's very much about adaptation, and that picks up the point to design for resilience. So without dwelling on this is the Keeling curve, the way in which CO2 is going up. That may or may not, depending whether you're a climate skeptic, have any bearing on temperature rise, but temperature rise is in fact real. And the Met Office are now combining their climate modelling with their weather models, and we all know the weather models are quite good over a week or so. Climate models, much more statistically based, actually are very accurate too. And the black line is data tracking the prediction in red. So the summer in 2003, those who remember it, will become normal in the 2040s and potentially cool by the 2080s, according to the scenarios that you might look at. And of course, there are a spread of those. But as we know, I think it's going to be greater than 2 degrees globally as an average increase. That leads to urban heat island effects. And when I was in DCLG, obviously, we were very concerned about the health and well-being issues. The colours there indicate the gravity with respect to mortality risk, and we had around about 900 excess deaths directly associated with overheating in the UK in 2003, and there were about 25,000 across Europe, so it's a very serious business. And I was very concerned when I was a Chief Scientific Advisor that we actually made sure that new buildings didn't make things more unsafe. So I think, without going through this in detail, adaptation is the first thing we have to think about, and resilience and, if you like, the insurability also links to that. The second one, very importantly, is about energy, and we need to decarbonise energy. We need to think very strongly about nuclear, get on with that. If we decarbonise electricity, we can actually have electric vehicles that actually do save the carbon emissions. At the moment, charging electric vehicles from a coal-fired power station or a gas-fired power station is almost carbon neutral. And then, of course, we mustn't forget mitigation. We've got to do all the right things to reduce our carbon impacts. Again, I probably don't have time to go through this, but I was the responsible officer for the climate change risk assessment for the built environment. I think it was in about 2010, and we identified some particular issues there. One of the ones that touches the insurance industry is the expected annual damage to residential and non-residential properties as a result of extreme weather. And I think the flood discussions are very interesting in that light, and there needs to be a sharing, really, of responsibility between the private sector, government and the householder, I believe. Resiliences and interdependencies are a very interesting topic. This is a real picture of an event that slowed me up going home to the south coast. Just around South Croydon about 2 years ago, the water main burst. It put mud all the way across the main line, stopped everyone getting home for about 4 hours. So when you're running infrastructure parallel, you have to be thinking about failure of one influencing the other, cascade failures, and that's really what this discussion's about. I'm not going to go into the detail here, but the resilience of city systems are dependent of many different topics. There's disturbances, vulnerabilities, interdependencies. We can sense and we can measure and fuse data to make inferences about risks of failure. Within a city, we have many interdependent systems, and this relates between these nodes. So you've got water, for example, feeds into buildings, food feeds into the workforce, and you have dependencies one on the other. And if part of that system fails, it can bring the rest of the system down. And understanding the risk there is another angle to insurance, I think, a further sophistication which we will need to bring in, and indeed government is looking at right now, and I guess the city's catapult will be looking at. We can estimate resilience. We've got all the mathematical tools for that. We know about cascade failure when you're designing an aircraft or a power station. Systems can be made to be redundant. You can have parallel systems, but doing that costs money. And you need to have a calculus to work out when it's worth doing, what the cost of the risk is. If you're looking at infrastructure, this was a chart produced by the engineering institutions of the Royal Academy of Engineering, showing the different things that can be affected in infrastructure versus the climate change issues. And you can see the red ones probably need to be addressed first. You can't read that in detail, but maybe these slides will be made available afterwards. And this, I think, is quite an interesting salient slide. This relates to the interdependency in Italy, and this was from Treasury presentation between electricity supply and, I think, the railway system. And you can see in these plots that the resilience goes up very quickly with a number of links, if you like, the redundancy in the system, but the cost doesn't necessarily go up quite as fast. So there is actually a sweet spot for different systems in terms of the amount of resilience you want versus the cost you're prepared to put in by adding parallel paths. So echoing really that very quickly, you've got antagonistic interdependencies, my story about the water main bursting, taking the railway down, but you've also got the synergistic capability. If you think about the story of High Speed 2, running a fibre optic link down the side of the railway makes very good sense for both in business, but you've actually got to get the businesses to think in an aggregated way, and the Olympics ODI was a very good, the ODA, was a very good example of businesses being forced to think in a linked up way to achieve outcomes and to work to a cost. Big data and smart cities is another topic. I'm going to skip through quite quickly, I think, possibly, but a great enabler, I think, in knowing what's going on. You can mitigate risk by predicting failures, doing something about those before they actually happen. There's a lot of business opportunity in measuring things and fusing that data together to create new insights. There's a lot of opportunity around for the private sector in small businesses, larger businesses, and the Open Data Institute under Sir Nigel Shadbolt is looking at that very carefully at the moment. Social network feeds are also interesting with respect to health, for example. So there was an example where the norovirus, the vomiting virus, was detected by Twitter feeds before the medical authorities actually got wind of it at all, and you can start to see the spread and control in cities. So you can integrate data in cities. These are a number of different examples: energy efficiency, flood simulation, social data, for example, crimes, public consultations, can lend evidence for referenda. And we can look at service synergies in cities which can lead to business and economic growth. Finally, and I hope I've caught up slightly, so the organisers may be pleased with me, the government is taking this very seriously. So apart from the Technology Strategy Board backing the city's catapult, which is a fantastic opportunity, they also did the Future Cities competition, which Glasgow won, I think it was 2 years ago. Runners-up were London, Bristol and Peterborough, as I recall. And they're now running a Foresight Future of Cities project, which is about public policy delivering via cities, centres of innovation and growth, and there's going to be a cross-government view across departments of how innovation can uplift performance and economic value in cities. So thank you very much indeed for your attention.
Tim Evans, Foundation for Water Research. There's been a lot of mention of climate change, resilience, flooding, no mention of, and the urban heat island. All those come together with our wonderful street trees in London. Most of those get no water from the hard surfaces around them, and yet they could be helping in flood prevention by taking water off the roads. They only survive because of leaking pipes underground. I was outside Nobel House this morning, and there's a beautiful plane tree and a gully taking the rainwater off the road and the pavement, not watering the plane tree. There are many opportunities, but we need to get people together for that. But none of you have mentioned it. Don't know whether you want to comment.
Well, I guess, and that does sign up very nicely to what so many people have been saying this morning about whether it's businesses not doing joined-up thinking or politicians not thinking long-term. Those are real problems.
I used to work for Arup as research director. We used to take, they do take a holistic view. And obviously we need to manage pluvial flooding, so runoff could be channeled to do much more useful things than just fill up the London a sewage system, if you like. It's a very, very interesting point. Green roofs and similar situations maybe could also be funneled into street benefit. And the ecosystem service that comes from trees mustn't be ignored.
Billy, you were nodding.
Yeah, and it's about innovation, about innovative technologies and ideas, and even the whole issue that we're grappling with a lot in Ireland, in the Irish context, is this whole issue of sustainable urban drainage systems and how they can feed back into the ecosystems and the water provision.
And Mark, from an insurance point of view, I mean, it often occurs to me that one of the problems with an incident like that is the effect it has on the public. And if you're constantly asking the public to do the right thing and then they see the waste that's being caused by something like that, it makes that message very difficult to sell.
Yeah, I mean, I suppose it sounds like a terrific idea, so I'm all for trees and have a few on my street, I'm privileged to say. But from an insurance point of view, I come back to the green agenda. Its relevance is it's hard for any individual to pay for that, so it becomes a societal government-driven initiative, typically, or community-driven initiative to spot those kind of opportunities. From an individual business or household point of view, it's all about, are there things you should be doing that could be incentivized in the form of insurance you get through the better terms, longer commitments, and that's things to do with the resilience of the building and fixtures, etc.
And it's only when you take an aerial view of our cities you actually realize how green they actually are, and to not avail of that is would be detrimental, to the whole ecosystem.
I'm Jim McAllister, Rutland Group. I'm concerned that the insurance industry doesn't put more pressure on government to stop local authorities from giving planning consents on flood risk areas 1, 2 and 3, that it doesn't have more power. Don't you think it should have?
I wouldn't want to be here to lobby for more power for the insurance industry specifically. I think it's regrettable to my mind that we've got a scheme which inherently incentivizes that behavior. Obviously there are rules like you can say anything built before a cut-off date is then, or after that cut-off date is excluded. so you can try and mitigate that risk. But you would hope that an informed government would see the issue itself rather than impose a solution on the insurance industry which sort of neutralizes it and creates, to my mind, a significant risk of one way or another developments happening, rebuilds on floodplains that will exacerbate the problem. So I don't think we're in a great spot. I'm not sure the answer is a more powerful insurance industry. We don't want our legislation to be driven by private interests, but I would hope for more enlightened government thinking on that issue to say, yes, we need to develop homes in the UK, but let's be mindful where we put them with respect to flooding, amongst other considerations.
Jeremy.
So just a couple of comments. One, as an ex-civil servant who worked at DCLG, I mean, to some degree, my personal view now I can express, I guess I'm not anymore employed by government, is that I regretted the loss of central overview and the regional spatial strategy and the creation of best practice really around land use. But on the other hand, I would say, with respect to the insurance industry, wouldn't it be good if the developer had to actually fill in a risk, if you like, evaluation by legal requirements, so that the finance that he had to receive to build the development actually was a function of the risk that that development suffered as a result of its location.
Billy.
And again, just on that, and was referred to again through one of the speakers, that the use of data, there's significant amount of data out there that can lead to better evidence-based policies and decision-making, again to link into where is best to build or not to build, as the case may be.
Okay, well, I think on that note, unless there's any final question, I'm going to thank our panel very much, Dr. William Hynes, Mark Weil, and Professor Jeremy Watson.